Good day, everyone. I'm Tisha Harris, the team leader of Texas Trio Team, and I'm thrilled to host a special interview just in time for Veterans Day. You know, my dad is a retired master sergeant for the Army, and my husband served in the Army for years and did 4 tours overseas. So, my team and I just felt compelled to share the most up to date information about VA loans so you can confidently share these facts with veterans in your family and in your network. With me today is a highly respected expert in the field of VA loans. Chad Bowman is a Marine Corps veteran and the branch manager of Veterans United Home Loans in Austin. His team funds VA loans in every county in Texas, and he's been focused solely on VA loans for over 19 years. So, welcome, Chad. We're so excited to have you today.
I appreciate it. It's certainly a pleasure to be here and to clear up some common misconceptions about the VA home loan program.
Yeah, for sure. And so, I've got a list of questions because as a branch manager and a team leader, I have people and agents coming to me asking me these questions. And so let's just dive right into it. So, can you shed some light on the misconception that VA loans can only be used once?
Oh yeah, this absolutely. This one is one of the biggest myths. Really, it's been around a long time, and I've heard it so many times. Hey, you can only use it once. So we have veterans that are saving their VA loan so they can use it down the road, but it's simply not the case. VA loans can be used multiple times if you just meet certain criteria, and it's based on entitlement. So every veteran gets a certain amount of entitlement, and they can use some of it or all of it. And when you use your VA loan and you pay off a loan or you sell the house, you get that entitlement back. It's called restoration. As long as you live in the property for at least 1 year as your primary residence, you can move out after that first year, keep it as an investment property with a VA loan on it, and then go get another VA loan with your what's called remaining VA entitlement. I've actually had clients with as many as 4 VA loans at the same time. So it is very possible to do that, and it's a great benefit that VA has. It's really a lifetime benefit that keeps on giving.
Yeah, absolutely. And that's so important for people to know if they think that it's just a one-time deal and, that's all they got, as being serving in the military of some sort of way, right?
Exactly.
So the misconception, not only is just about the amount of times, but also about the limit for like a price point. So I've heard 417,000 as a max. So what's the truth there?
Yeah, definitely another common misunderstanding. 417,000 was the limit for like 10 years straight. Everybody kind of got used to that and said, okay, VA stop at 417. That goes all the way back to 2016. Every year after that, it's been increased every January. And then in January of 2020, VA made a huge change where they have something now called, I call it full entitlement and partial entitlement. So with this new change, instead of stopping at the county loan limit, you can now go to 2 million on a VA loan with no down payment. Now that 2 million comes from most lenders setting their own limit. So if your lender happens to stop at 2 million, that's going to be your limit on VA, but there's no longer stopping at that county loan limit if you have full VA entitlement. Now, full VA entitlement, I'll just explain that real quick. It's when you have never used it before, so you have it all available, or you've used it before, but you paid off the VA loan and restored that entitlement, or you have, say, for instance, a VA loan currently, and you're going to sell your house before buying your new home, and maybe you're closing at the same time, but as long as your current home closes first, you get that full entitlement back. That allows you to go as high as 2 million or whatever you qualify for. So for instance, if you qualify for 300,000, we're not going to pre-approve you for 2 million. We're going to pre-approve you for 300,000. Sure. But you have the option of going that high. Now, if you don't have full entitlement, that's where you get put in the other basket here, which is partial entitlement. Partial is if you've used some of it before and it's still tied up, whether it was on a VA foreclosure or a current property you've kept as an investment property, or a non-veteran assumed your VA loan, and we'll talk about assumptions in a bit, but they assumed it, and now it's tying up your entitlement in that property. So anytime you have some of your entitlement tied up somewhere, that limits how much you have available, and that's where we go back to the county loan limit, which currently in every county in Texas is 726,200. And so what you do is you take your current loan, subtract it from that county loan limit, and then what's left over is what you have available for another zero down loan on VA. And in fact, let me give you a quick example. I know there's a lot of information here, but For instance, if my first VA loan was 300,000 and I went ahead and lived in the house for a year and then I moved out, make that an investment property, keeping my VA loan on it, I could go get another VA loan for 426,200, that remaining amount of the county loan limit, and have another VA loan on another house for my primary residence. Keep in mind too that that limit goes up every January, typically increases. So we might see 750 or more this year, just a couple months from now. So this is something, by the way, I do a monthly VA newsletter, and I go in a lot of detail about how this works, because it's kind of a little complicated sometimes, but at the end of the day, it's a lot more flexible than most people realize.
Sure,
Yeah.
absolutely. And you said like there's changes every year. And I recall like when the pandemic happened that it was so discouraged for, buyers agents and listing agents were throwing it out that, that VA loans are hard to qualify for. And so, we're slowly seeing them integrate back into the market as something that's, a benefit. So what can you tell us about this? Are they hard to qualify for?
Yeah, it's so ironic to hear this, because in my world where all I do is VA loans, they really are the easiest program to qualify for. VA, in fact, is just the most flexible program out there. Assuming somebody's served the minimum period of time required, that's the first step. Generally, it's about 2 years of service, or they're a disabled veteran. They got out maybe earlier than that, but they have got out on a medical discharge or something. Assuming they have the eligibility and the entitlement, which is what we just mentioned, the third piece of the puzzle is just qualifying, okay? And that's where VA is really awesome. So I'll give you lots of examples here. Obviously, no down payment, first of all, so you don't have to save up all that money to have a down payment. And also, there's no mortgage insurance, so you don't have to make that additional mortgage insurance payment every month. So that makes it easier to qualify for. But VA also is very lenient with the debt-to-income ratio. So when you look at all your debts to your income, a lot of programs are in the 40s. Conventional stopped at 50%. VA can actually go into the 50s, 60s, and even at 70% debt to income ratio, which gives you also a lot more buying power. So it gives a lot more flexibility as far as qualifying, and even more buying power when you get pre-approved. When it comes to bankruptcies and foreclosures, VAs only need, or veterans using a VA loan only need 2 years after that what they call a derogatory event. So as long as you reestablish credit after that 2 years, and you don't have any more negative things on your credit, all it takes is 2 years, and you can get right back in a house. So keep in mind too that currently we go down to 620 on a VA loan. Every lender is different, so some lenders set different amounts. But for the most part, a lot of people are at 620. And what we have at Veterans United is an in-house credit repair program. For anybody that doesn't quite get to that 620, we help them with that free program to bring their scores up, to help them get into a house. So that's really been a positive thing as well. And that's another reason why VA is easier, because of the flexibility of credit and what we allow and don't allow. And then there's more like gift funds. VA loans allow gift funds, which makes it more flexible. I had people buy a house that did not have the money for the earnest or option deposits, but they got them from a family member who was able to gift them the funds. They're able to get a house. And then at the end of the day, you really only need enough assets to close on a VA loan. So whatever's due at closing, typically, if there's some exceptions, but for the most part, if you have the money to close, we can get it done. So at the end of the day, really, VA is the most flexible program out there.
Yeah, I mean, it is incredibly flexible. And, one of the misconceptions too is that it's just only for lower incomes or, credit issues and all of those things. So, you know, I know it's not accurate, but for those that believe that it is, can you
Yeah.
just detail that?
Yeah, we hear that a lot. I heard it just a couple of weeks ago. A realtor said she doesn't work with a lot of veterans because she doesn't really have a lot of low income buyers. And I was like, oh no, don't tell me you just said that.
Just send them to me. It's okay.
Yeah, no kidding. So people of all income levels and credit use VA loans. You can have excellent credit and have a high income and still use a VA loan. It's really just a matter of the numbers. Does it make sense for you to do it? For me, I personally, as a Marine Corps veteran, I've used my VA loan 3 times, and all 3 times it beat a conventional loan. And I could have done 20% down, and I have obviously decent credit. Well, actually good credit, but it's all good. And could have done the conventional, and VA was better all 3 times. So it's not better every time, but for the vast majority, maybe 99 out of 100 times, VA is going to be the best option. So that's why it's so important for a veteran to get with somebody that can compare those programs for them. With the $2 million limit, I mean, you can do a lot more with the VA loan these days than you could back when it was just 417.
Yeah.
And keep in mind too, a couple other things. The VA jumbo loan Anytime you go over the 726,200, the county loan limit, uh, anytime you go over that, it's a jumbo loan. And on VA loans, the rates are a whole lot better, typically a whole lot better on VA than they are on conventional jumbo loans. So that is an additional reason why folks buying higher priced homes and maybe have higher credit, maybe putting down 20% should still look at the VA program and compare. That way they know what all their options are. So they might be surprised just how good the VA loan is.
Yeah, and I mean, you're talking about, potentials of $2 million or these jumbo loans and stuff like that. So some people might believe that there's a certain type of property that they can only buy with these properties, not knowing those amounts and things like that. So can you maybe talk about, what's the reality of that?
Oh yeah, it's really not as limited as folks seem to make it out to be. You can pretty much buy almost anything with a VA loan: single family homes, condos, manufactured homes, even barn dominiums. They've been coming up more recently in the last couple of years. Even multi-unit properties. As long as the veteran lives in at least one of the units for a year, they can buy up to a 4-unit property. So there's a lot of flexibility there. VA really just looks for, is it safe, sound, and sanitary? Now, that's not a lot of detail, but that's basically what they're looking for. And VA, keep in mind, does not inspect the property. So they used to do inspections way before I got in the business. That doesn't happen anymore. All you really have is the VA appraisal. And sometimes that appraiser does repairs, and sometimes they put repairs in there, and sometimes they don't. For the most part, we don't really see it come up very often. So really, there's nobody inspecting your property from that perspective. So just a lot more you can do with it. With VA, the VA condos, so a condo does have to be VA approved or VA accepted. There's a whole process for that, but there's also a list online where you can see thousands of the accepted VA condos right here in Texas. And then for multi-unit properties, again, you just have to live in that property at least 1 year in one of those units. Then you can rent out the other 3 for the first year, and then rent out all 4 after that. Okay, so other things like VA for acreage, you can use it for acreage as long as it has a house on it, because VA doesn't do land loans. So it has to be a house that you can live in, again, as your primary residence. I guess the only thing that really doesn't work well on VA are homes with serious repairs, because if you had a lot of really serious repairs, then the VA appraiser would probably list those things as required repairs, and you'd have to do them before closing. So for the most part, cosmetic issues are not usually a concern. And I would just always, if you're looking at properties and you're not sure, run it by the loan officer you're working with and have them take a look at it just to say that, it's going to be okay. But I can tell you it's very rare that we have properties fall out over property issues, unless it's just something from their home inspection where the buyer's just like, hey, I don't like this and I'm going to go buy something else. But otherwise, it's really not a big issue that folks make it out to be sometimes. Yeah.
Right. Yeah. And so, I mean, there's so many options that somebody can use, but, I just want to kind of circle back to what you said is like the VA does not do land loans. However, there is an option for the Texas Veteran Land Board program, right?
Yeah. So the land board has a couple programs. They have a land only program. They have a home improvement program, and they have a housing program. And I think I'll actually mention the housing program in just a bit. But as far as land, VA does not do land only. So that's why you'd want to go with the Veterans Land Board for that. Home improvement, again, you go with the land board. And then for the actual property that has a house on it, you usually start with the VA program, and then the Texas Vet or VLB program is something you potentially add to your VA loan. And I've been doing those for about 18 years now. So very familiar with that program as well.
Yeah. So you could even stack some things on top of, like you said, use it more than once, like you originally said.
Yep. If it makes sense, we're going to use it.
Yeah, for sure. So sometimes it's out there that, sellers have to cover the buyer's expenses and their funds, prior to closing or at closing. So what is your insight on that?
Yeah, so for years we had to deal with what's called non-allowable fees, and that was kind of a big deal, and the seller would have to pay this or have to pay that. But at the end of the day, the VA does not really require the seller to pay anything. The only thing they say the buyer cannot pay on a VA transaction is realtor commissions. That's all. And typically the realtor commissions come from the listing agent, and it's all negotiable. But for the most part, you don't see the buyer directly paying the commissions. So that's the only thing VA says the buyer can't pay. Otherwise, the buyer can pay title policy, survey, termite report. That's a very common one. We hear that the seller has to pay it. It is not correct. The VA has come out multiple times. It reminded all of us that the seller does not have to pay for the termite inspection. So it's something the buyer pays for usually during their option period. Not a big deal. So really everything will be paid by the buyer. And in this market, we've seen a lot of sellers actually provide money to the buyers to cover closing costs or to help pay for things, but it's not required. That's the important part. So really, sellers that don't need to be afraid of VA loans.
Right. And so, as you're going through the loan process, you're getting through inspections, you get one day closer to closing, then appraisals come up. And so, that's something obviously that the VA, just like conventional or FHA, you're going to have that appraisal report. And it's always like a fear of, oh my gosh, the VA is going to, it's going to come in short for some reason. So is that accurate? Can you confirm that for everybody?
All of these, every one of these things we're talking about, I hear all the time. And just the concern that somehow the appraisal is going to come in short on VA. I've even had people switch their financing to conventional because the seller wanted to go conventional, and then they get appraisal done and it came in short on the conventional. I'm like, it was going to happen anyhow. It didn't matter what kind of appraisal you got. So
Yeah.
on VA, we have data supporting that it does not, VA loans do not come in short any more often than any other program. In fact, I look back at just our data with just our branch here in Texas, and this is covering all across the state of Texas, so not just one area. And in the last couple of months, we had all of our loans came in above the asking or above the sales price. And only one came in at the sales price, and none of them came in short. So, of course, knock on wood, that could happen tomorrow. But for the most part, they rarely come in short, at least right now. Of course, it goes with flow with the market. But when you see VA loans starting to come in short, it's going to happen with conventional and FHA as well. It just depends on where the market's at. But just not an issue on VA, and not something I'd ever be concerned about because it's, in fact, VA appraisals are coming in strong, and they typically take a week to 10 days. So basically 2 weeks at the most, you're going to get an appraisal back. And with 30-day closings, it's pretty easy to get everything done. So
Right.
it's they're going great. I wouldn't be concerned about VA appraisals whatsoever.
Yeah. And, just not only is that just a step through the process of the loan, but, for our consumers and our buyer clients, they need to be informed about funding fees and what that looks like for the VA. So what's your thought that they could be expensive and, how that
Sure.
works for them?
Yeah, I mean, if you're digging through things and you're like, hey, I want to find a reason not to do the VA loan, be like, okay, it's the VA funding fee. I don't want to pay the VA funding fee. And I've heard that so many times. But it is so much cheaper than paying mortgage insurance on an FHA loan or mortgage insurance on a conventional loan. So it just, you have to take a look at the numbers. When it comes down to it, I'm a numbers guy. I want to see it lined up next to everything else. Hey, if VA is better, show me, Chad. Show me the difference. And VA, you just don't have that mortgage insurance, but you do have what's called a VA funding fee. Keep in mind, about half the veterans don't even pay it. They don't have to because they're disabled veterans. Even a 10% disability rating with the VA would waive it. 10%, 20%, all the way up to 100. It's going to waive the VA funding fee completely. Or there's Purple Heart recipients. It waives it as well. So there's a lot of people that don't pay it. And the ones that do, it gets rolled into your VA loan. And remember earlier, I mentioned that I used my VA loan 3 times. I'm not a disabled veteran, so I've paid the VA funding fee all 3 times. And all 3 times, it was still better to do that than to go with conventional, just because of the difference in interest rate at the time. And you can also, by the way, pay 5% or 10% down, whichever you choose, to reduce the VA funding fee. So the second time I used it and the third time I used it, I put 5% down because it helped reduce that fee, and it still made sense for me to do it. So you just want to look at the numbers and make sure you're comparing apples to apples on all the programs that you qualify for to figure out what's best for you.
Okay. Yeah. And that makes sense. So you make a collaborative effort to figure out what, from your team and, the realtor to help them navigate that. So when you're talking about processing time, you've thrown out 30 days closing, a myth is that it just takes so long to process. It takes so long to close, as a discouragement. So what's the reality on that?
Yeah. And I think it really varies by lender. So for somebody that specializes in VA loans, that's all we do. I mean, we have conventional and FHA, but it's so rare. In fact, this last month, we just closed out October. We were 100% VA loans in October for both my branches here in Texas. So we really are focused on that. So we know how to do it. It's easy for us. We can still do conventional and FHA, but it's not so easy for us because we don't do it all the time. So what's happening though, in this current market is that a lot of lenders are hurting and they're saying yes to anything they can get their hands on. So they're saying yes to VA loans, even if they've never done it before, or they've maybe done 1 or 2, and they're just trying to kind of wing it. And in those cases, yeah, it could definitely take longer to process, or might not even close at all because they don't necessarily know what they're doing. So obviously there's a lot of great lenders out there. So I'm not saying that happens to everybody, but I just think it's so important to work with a VA specialist. They understand the ins and outs. Also, we have seen thousands and thousands of scenarios that other people that are not doing VA haven't seen yet. So, we know how to solve a lot of the problems that we've seen on a regular basis over the years. And that just gives us a hands up on our competition by being able to know what to expect on a VA loan, know what to be ready for, and know how to navigate the process. So for me, that makes the difference on VA. So working with the right company, the right loan officer can really make a difference. If you work with somebody that doesn't do a lot of VA, maybe that's not the best idea if you're a veteran.
Yeah,
I'm
I
trying to be
completely.
nice about it. I'm trying to say
Yeah,
it
I mean
nicely.
you're a veteran, you've been there, you've done it. So I mean, why not walk them through that? So I couldn't agree more with you. And so lastly, I just want you to clarify the misconception that a VA foreclosure prevents you from getting another VA loan in the future.
Right, right. And honestly, early in the business, I thought that was the case because when you have a VA foreclosure, the VA has a loss, right? Basically, the lender claims a loss with the VA reimburses the lender for a certain amount, and then the VA says, "Hey, your entitlement's tied up because you had a foreclosure, and yet until you pay us back, you don't get that entitlement back." So it would look like actually on a certificate of eligibility, if you look at it after a foreclosure, it basically says you have no entitlement available. However, if you go look at the small fine print, it says, but if you go over this certain amount, you have what's called remaining second tier entitlement. And so even though you had a VA foreclosure, you can still use second tier entitlement and get another VA loan without paying back the VA for the foreclosure, which is surprising, right? I mean, it's really surprising. But it's cool that VA does that. So it's just a 2-year wait. We were talking about just 2 years, reestablish credit during that time, and don't have anything negative on your credit during that 2-year period. And then you're good to go. You just can use your remaining entitlement. And to give you an example, kind of similar to the one we said before with the investment property. With this one, $300,000 house, it went into foreclosure. It ties up your entitlement with the current county loan limit that we have of $726,200. You've got about $426 left to go out and get another zero down loan. So there's a lot you can do there. And a lot of people don't know it. In fact, to give you a quick example, I had a client earlier this year or last year. I don't remember exactly when it was, but I think it's a good example. He called 3 different places, 3 different lenders. All 3 lenders said he was not eligible for a VA loan or did not have enough entitlement because he had a VA foreclosure. All 3 of them said he couldn't get a VA loan. All he was trying to do was buy the house that he was currently renting from his landlord. He talked to a friend of his who said, "Hey, call Chad because he's a VA specialist. Let him take a look at it." And we had him pre-approved that same day for a VA loan to purchase that house. And all it came down to was that the other lenders were not reading the certificate of eligibility correctly, which is just, it shouldn't happen. It shouldn't be like that. But they just are not people that do VA on a regular basis. And so that's why I'm out advocating for veterans. And that's why I'm here to help you do the same thing.
Yeah, absolutely. I mean, it means a lot when you have the right people in your corner. And so, thank you, Chad, for just shedding so much light on these common misconceptions that, like I said, I know I hear, and, if I'm hearing it in the business, and I know it's being spread around. So, I hope other people can watch this and, your expertise is just invaluable when it comes to something like this.
Hey, it's my pleasure. I love being here. And, it's really essential that veterans and their families have accurate information about VA loans so they can make informed decisions. That's all it is. We're just trying to get them information that can help them make the right decision. And I want everyone to remember that VA loans have a profound impact on military veterans and their families. It's because of VA loans that veterans can buy sooner, they can qualify for more home, and they can build wealth faster. So I personally honestly believe that it's more than a financial matter. It's a moral obligation that all of us providing, real estate services ensure that our military community is fully aware of their VA benefits. I mean, it's that simple. In fact, aren't you teaching or don't you have you're hosting a VA class for realtors in November. Is that correct?
Yeah, absolutely. So here at our Caldwell Banker office in Brenham, on November 16th from 9 to noon, it's a realtors exclusive event because like we want people in our field to know more about it. So it's a 3-hour CE class from 9 a.m. to noon, November 16th. And so we're going to have that just for a limit of about 30 people. So, if by chance you're watching this and you want to join us, comment, in the chat if you want more information. But yeah, we're really excited to offer that to our community and to local realtors that aren't even in our brokerage. It's just open to any realtor that's willing to learn and serve our veterans as much as we can. So do you have any final words, Chad?
Oh, I always have final words. Hey, just a big thank you to you for doing this interview, for getting this important information out to the people who need it. And I just hope everyone will join the cause, support veterans, and help us make a difference.
Absolutely. And there you have it, folks. Remember, knowledge is power. Just staying informed and don't let these myths hold you back. If you found this interview helpful, please like, share, and subscribe to our YouTube channel for valuable insights. And until next time, take care.